Hey everybody. Today I will be reviewing Alibaba. So they've been on a bit of a rip for the past couple months. A couple really good earnings calls, a lot of stock growth. So I really don't know much about the company. So I'm going to go through all their financials, see what their statements look like, and give you a score to go off of. So make sure to subscribe and let's get into it. All right, so let's get right into it here. I will quickly get rid of the Disney stuff there. So cost of capital is not listed, which is fine. Target price looks like 119, which is decent, bit of a jump. Long-term growth rate is 6.9. Now, I don't think I've ever given a negative for the long-term growth rate other than if it's negative. So honestly, I'm just going to assume it's normal for the industry and give them the credit there because I really don't know. I clicked on it. Oops. But yeah, sure. So let's go right into the income statement, see what that looks like, and we'll get some real stuff here. Sales supposed to be a very slight increase this year compared to a decrease from 22. I mean, honestly, sales have kind of stagnated at least for the past 4 years. I really can't give the full credit there. I could. That's not even a big enough jump to say that it's increasing again, but no, that's no credit there. Operating income is same story. Um, Although to be fair, it is lower now. Sales are lower than 22 and operating income is higher than 22. So they did cut costs, which is one thing to say. Their SG&A expense you can see here is 31 compared to 32.3. That's not bad. So honestly, I'll do half credit for that. Now net income will be, it's kind of this, well, actually it stayed the same. But I mean, it was higher last year despite decreasing. So there is something going on there, but I honestly, with the stagnant for the past 4 years or so, I mean, oh my God, compared to where their net income used to be, they're not making anywhere near as much. What is their operating income? So they used to make way more profit, which is something I don't even know how to explain that, where their EBIT was 13 but their net income was 22. um I'm not really sure how to explain that, but I don't like the way it looks. So EPS, fairly consistent, bit of a decrease. I'm going to give that the 0.5 as well, just because it's kind of weird. For total shares, we are seeing decreases, which is what we like. Fairly consistently since 2021, it looks like. So I am liking that. That's getting the full credit. Let's look at the balance sheet. I'm assuming this will be better. So decent amount of cash, very good amount of cash compared to their debts, which I like. So assets have actually declined for now 2 straight years, which is not, I'm not really crazy about that. Their short-term debt is perfectly fine. So their debts are, long-term has actually decreased compared to where it was, which is nice. Short-term hasn't. It's actually almost doubled, but at the same time, it is fairly minimal compared to their cash. So I think I'll do the half point there. Retained earnings should be good, which they are. Nice to see that. Let's go into the cash flows. I doubt their cash flows will be bad. Operating, always positive. Not as much growth, but with cash flows, it's a little different, where positivity is something I'm looking for a little bit more. Investing's negative, financing is negative, changing capital stock, that's always good. Assets from acquisitions, that's something interesting. Purchasing some investments, although this year so far they have not purchased new investments, which isn't necessarily a bad thing. And then free cash flow is also consistently positive. I like that too. It has decreased for the past 2 years though, so I could give the half, or not 2 years. Compared to 23, it is supposed to decrease, although it's also up and down and up again. I don't really know what to say for that one. I mean, it's consistent, at least relatively consistent. So I think I'll keep the credit there. Cash flow statement does look pretty good. Let's see the use of cash. We see a lot of stock repurchases, which in the past 3 years there have been a few. Zero debt issuance, which is fantastic, although no repayment either. However, I mean, when you don't issue, you don't have to repay, and they are paying the interest expense, so that's something. Although they do, again, have debt. So the fact that they aren't repaying it despite having what I assume is billion. This should be billions of dollars. I can't imagine it wouldn't be. But anyway, multiple billions of dollars worth of cash where they could be repaying their debt. But I don't see why they ever wouldn't want to. But let's see, the repurchase of stock has been very, very nice in the past 3 years. That is excellent. And you could see that if you happen to go over to their stock chart, you could see it has gone up a lot in the past year. A lot of growth. And part of that is probably because they've spent around $30 billion repurchasing stock. So there's just not nearly as much supply. The price is going to go a lot higher. For the SG&A, for the ratios, SG&A is actually decreasing, which is nice to see. Has been since 2021. So that is nice. Oops, I just messed something up there. So has been decreasing since 2021. That's pretty good. Net margin, we're seeing it increase over the past 3 years, but a large decrease compared to 20 and 21, which is not great. I'm probably going to do the 0.5 for that only because sales have increased a ton from 2021 from what I remember. So that is something to also consider. ROA and ROE are fairly consistent, increasing over the past 3 years, and then same story with that where it's down. But again, they took on many more. Actually, their assets have been declining. That's going to be the 0.5. And then long-term debt to total equity should be pretty solid. 17% is nothing, especially compared to if you saw the Disney video. The Disney video was at over 66% at one point. But the consistency here is pretty solid, and they have brought it down from in the past. So that is pretty good. I like to see that. So for Alibaba, 17 out of 23, final score 72. That is pretty decent. Pretty decent. What did I say? 72? I hope so. 24. 72, yeah. So overall, once again, kind of a middle of the road average rating here. Actually, this is basically directly in the middle of everything I've done. So that is it for Alibaba. Make sure to subscribe if you haven't, and I will see you in the next one.